Mr. M.K. Surana, Chairman and Managing Director of HPCL, joins us with great pleasure. Let me now welcome him on the show on behalf of Team ET Now. Mr. Surana, good morning and thank you for joining us. First, the obvious question, which you would have guessed by now. How essentially have your retail fuel margins moved in this leg of crude volatility? When oil was at $60, oil marketing companies were making money. When oil went to $80, oil marketing companies took a deferred price hike. How is the situation right now, and are you making money or are you losing money at the retail level?
So that question comes even when the crude prices are going up, when the crude prices are going down. We don't make money or lose money and keep account of the money on day-to-day basis. We see our overall the yearly profits, losses, quarterly profits, losses. As you might have seen that there was the price hikes in between last few days, and so that would have allayed the fears that whether the prices are being contained deliberately or not. But while there are moments and volatility in the crude prices and the product prices and the cracks as well, but we are keeping a track of it on day-to-day basis, and according to what are the international product prices and our perception on the near-term future of these prices, we are passing it on in the market.
If crude prices stay where they are right now, about $75 and rupee at about 70, what is the maths looking like?
No, the mess, I said earlier also that it is not that when the crude prices are lower, then the oil marketing companies will make the huge windfall gains, or when they are higher, then they have to absorb everything. We operate on a thin margin range, and whatever are the international prices and the exchange rates, according to that we have to keep on adjusting the market pricing. Now, it may happen that on day-to-day basis we may do or we may not do, depending on what is our immediate future understanding of the market and the international prices and the events which are going on. So, we can only even it out a little bit, but we cannot absorb it as such.
Mr. Surana, what we were trying to understand is that assuming rupee continues around 69.70 to the dollar and crude cools and settles around the $75 per barrel range, what would be your average cost of crude per barrel?
No, average cost to crude has got many components. But the more pertinent question is that actually cost of crude per barrel and the processing cost is not really important. What is important is what is the international product prices, because the market prices of the products are guided by international product prices and not by the cost plus pricing from the crude. Now, if whatever is the international product prices, we are able to refine the crude, get the crude and process it out in a lesser money than that, then we make some profit on the refining side. If we do not do that, then the refining companies will make losses. So, but to that extent we operate efficiently to ensure that whichever situation it is, we make the refinery margins, and that is what is reflected in the profitability of the refineries. One measure of that, that is the difference between the product pricing and the crude pricing without really accounting for the efficiencies of the individual refineries, is the GRM. But within that GRM, then each refineries have to operate efficiently to make profits of that. Now, as far as the product pricing is concerned, the international pricing is there minus the refinery transfer pricing and the marketing cost. That gives the marketing part of the profitability. But if the crude remains sub 70 or then that is definitely a good situation for the country, for the oil marketing companies also. But in the recent past, we have seen the crude going up to 80 also, and the dollar touching 68. And we have managed the situation. So, we will keep it watching it. As far as the long term profitability of the companies are maintained, then there should be not much of concern on that. But any lower side of the pricing on the crude is definitely a welcome situation as far as OMCs are concerned.
Mr. Surana, I think what we are also trying to ascertain is, how's on the ground pricing evolved. In the quarter gone by, on retail prices, did you witness a loss or a profit? Like, how was it benchmark to the procurement cost of crude?
No, as I mentioned to you that as far as the product prices in the market is concerned, that is guided by the international product prices, and that international product prices is not only the function of crude prices. There are also a crack element, that is the differential between the product prices and the crude prices. Now, that may move in the same direction, they may move not in the same direction, it may move in the same range, it may not move in the same range. For example, the MS cracks came down even though the crude prices were going up, but the diesel cracks were firm. So, we need to compare as far as the international product prices are concerned. Of course, there is a correlation between the crude price and the international product prices.
Okay. Can you broadly also tell me that which way the diesel demand has moved? You know, this is an important indicator of industrial activity, and you're in the best position to give us a sense that what has been the trend for the quarter gone by, and what is your understanding of the diesel demand for this quarter?
So, as far as May demand was subdued, but as far as June demand is concerned, it was quite robust. In fact, in the June month, the diesel demand growth was 7.8% and MS demand was 13.7%. So, if we see the quarter April to June on the industry basis, the MS demand growth is 8.4% and the diesel demand growth is 3.6%. and which is quite a good demand growth to that extent. June was particularly a good demand growth period.
Given that
overall also, if we see all products put together, there was around 6.2% market growth of all the petroleum products put together in the quarter 1, that is April to June 2018.
You know, when crude prices went $100 plus about 8-9 years ago, all OMC companies had their issues, they were running out of cash, they were forced to cut on their capex. I am assuming that in terms of your capex commitment and other expenditure which you had projected for FY19, they remain intact irrespective of the crude volatility. Can I get a sense on that?
Yeah, all our capex plan are intact. In fact, for 18-19 we got a capex plan of around 8,000 crore, and we are very comfortable on the debt to equity ratio as of this year is concerned. There is absolutely no concern on that.
Want to also understand, Mr. Surana, about 400 bids, as we understand, have come so far for the latest round of bidding in the CGD network. How is it that you're looking to participate in the same?
Actually, HPCL is looking gas business as one of the business lines for the future, and we have submitted our bids for some of these areas because the bids are already submitted and they are started getting open from yesterday onwards. So, I would not like to comment about the specific thing as to where we have participated and what is our capex plan, because that is one of the which is a related parameter in the bidding evaluation. But HPCL is looking at the CGD business and the gas business very with lot of interest, and we do have some of the CGD business in some of the cities in the country, and in this bid round also we have submitted our bids for quite many geographical areas, and we will continue to do that in future as well.
I hope you'll appreciate my next question, and this is of immense market curiosity. Your stock is down 30-40% from the recent high, and the fear in the market is that oil marketing companies, they may be deregulated on paper, but they are not deregulated. Sometimes there is election compulsion, sometimes there are issues related to oil prices. Earlier when oil prices were coming down and when they were going higher marginally, oil marketing companies were changing rates on a daily basis. Do you think there is going to be a challenge given the scenario we are in, both on the political front and also on the oil front, or oil marketing companies are completely deregulated, there is no pressure whatsoever, there is no compulsion whatsoever?
No, as far as MS and HSD are concerned, they are deregulated some time back, and oil marketing companies are varying the prices depending on the international prices of these two products. Now, whether the market may be calculating on day-to-day basis and we may be seeing certain range, as such the price changes happens on a rolling basis of 15 days. So, a normal person in the market may not be able to appreciate it immediately that how the prices goes up on a particular day or not, but otherwise on a period basis if we see, it is the adjustment are being done in line with the international market pricing. But because of the rolling 15 days rolling period, you may see slightly a tempered movement when the prices are going up or down either way.
When you say tempered movement, are you likely to follow the spirit of free market where whatever happens to currency, whatever happens to crude, you will map that eventually? It could be a lag of 10 days, 15 days, that's acceptable. But what you are assuring us is that, look, there is no compulsion where you will not be allowed to increase prices for whatever factors are at play. I just want that commitment from you that you may increase prices, you may decrease prices, it may come with a lag, it may be late, it may be slow, but ultimately you will normalize.
As the condition stay today, the MS and HSD are decontrolled products. There is no indications to suggest that there is a likelihood of bringing it under the control regime again, and to that extent the prices movement will follow the international pricing trend. There may be a little bit variation in the timing of those. There may be a evening out of the prices to ensure that there is no sudden jumps in the market, but it continues to be the decontrolled products and the prices will move in line with the international market. Now, if the prices move substantially higher, let the crude prices go above $100, $110, there will be a new situation, and at that time again the things are to be viewed as to what is the required thing. As I mentioned earlier also, that in a country like India, all the things are important, which includes the consumer's capacity to pay, it includes the health of the marketing companies, it includes the budget of the government, and all factors goes into deciding what is required to be done. In the current situation, I think that the pricing regime will continue to be decontrolled if the situation continues to be the way they are as of today. And if it softens further, then the situation becomes even more healthier. But I wish to tell that actually when the products were decontrolled, the crude prices was in the range of $80.
It's very, very reassuring to get that kind of a commitment going. I hope you appreciate my curious questions, because they would have an impact on the way your shareholders would be viewing your company. Just that stock has come down on that confusion and fear. I'm glad you've clarified that.
Yeah, there are a lot of the perception on the market also, but the way it is right now, I think we should be keeping ourselves a bit more comfort zone rather than so much worried and getting panicked on that.
We really sincerely do, because it's been quite a sharp crack in the entire OMC basket, not just HPCL. In the last 6 months, some of these stocks have fallen very hard, almost 30 to 40% is the kind of correction that most of these stocks have seen.